What's up, guys? Brian Horton with BK Trading Academy. I want to throw this plug into you guys. We are actually trading stocks here. We have a new YouTube called BK Stocks Academy. If you are unaware, if you're not in our Telegram, I want you guys to look in the description below and subscribe. We're going to be talking about stocks, ETFs, and also indices. So we're excited about that. This is a new addition to our academy. But in today's video, we're going to look at gold. I'm going to analyze gold for you guys and let you know what I see. We're going to also take a look at the commitment of traders and just kind of dot our I's and cross our T's to make sure that we cover all angles when we are trading. So if you're unfamiliar with the COT report, this is where the big boys, the big institutions actually putting in longs and shorts. So we typically want to follow them. However, we want to be cautious when we are trading the COT report because we want to respect price action as well. So that being said, guys, go ahead and subscribe to our new stock channel here and you're in for a treat. Let's dive into gold.
Yeah, I know I got problems and I don't know where to go. I don't want to put the blame on you, so I put it on.
All right, so here we are, guys, and if you follow us for a while, you know that we always look at the higher time frame to just get an overall view of the trend, which direction we're trading, because typically you want to trade with the trend. The risk reduces significantly when you're trading with the trend. Now you can trade pullbacks, but it can increase your risk. So let's go ahead and take a look at it here. So if we're looking at the weekly time frame, I point this out all the time because it's very significant. We want to point out our highs here, and we see that back in July of 2020, this was our high here. In March of 2022, it also came back and retested that high. And then recently in May of 2023, earlier this year, it came back and retested it again, right? Now, the only difference between these previous highs here and here, which didn't happen here, was price shot all the way to the downside, thousands of pips. And again, thousands of pips, if not even further. Let's go ahead and look at it a little bit better. And we can see it didn't happen here. Now, let me go ahead and get my measuring tool and see how long it took for it to get this peak here down to this bottom. It took about 245 days to do that. Okay. Again, let's look at the second peak here all the way down to the bottom. It took about 252 days to do that. And now we can see this last peak here to where price is currently at. We're at 210 days. Okay. So already we haven't even broken this bottom here. This tells me a huge thing. This gives me a lot of information. And this is a type of analysis that a lot of people don't really consider, is when they look at these peaks here and you want to look at how long it took to get to the bottom. Now, here we are, the third peak here, and it hasn't even gotten close to these bottoms here back in March of 2021 and here back in October 2022. So this tells me that ultimately gold wants to go higher. Now, a lot of things are going on. If you understand crypto, if you understand the weakening of the US dollar and a whole bunch of other currencies around the world, they're really weak compared to the metal. So they're really weak compared to even BRICS nations. We haven't talked about that too much, which is Brazil, Russia, India, China, and South Africa. Their new currency that they're building, which is weakening the United States dollar. And we know that also the United States dollar isn't backed by gold anymore. However, the BRICS currency is. So there's a lot of stuff going on. And I do believe that the gold is going to continue to rise ultimately. So that is my long-term goal, is that price is going to continue to rise for gold. Now we want to see what's going on in the short term. So that's when we go to the lower time frame. So you can see how I use fundamentals. I understand the weakening of the dollar and other currencies. I understand the strengthening of metals, and I understand digital currency as well. And so one thing that hasn't changed with metals is the value since the conception of metals, right? So we had metals since the beginning of time. We had currency just a few hundred years ago, and metals have always dominated. So that being said, I understand fundamentals. Now let's look at price action. Okay. So one thing that I see is an inverted head and shoulders pattern. If you're familiar with inverted head and shoulders pattern or just a normal head and shoulders pattern, it's a reversal pattern. So I have it drawn out here, and I'm going to explain to you exactly how I found this out here. So what I would typically do is get my head and shoulders tool here. I'm going to go ahead and draw the first left shoulder here, bring it up to the high, connect it to the head here, bring it up to the top right shoulders. I believe that price will come back down sometime. I don't know if it's going to be later or soon. Now, a whole bunch of things can take place, like the war. A lot of things can take place for this to come back down. And we know that if it comes back down and build the right shoulder, this is where I'm looking to buy and go long, possibly for a swing trade or long term. If it does, I believe it at least come back to the top right shoulder or to the bottom where the neckline is. And this is where I am interested in buying. Now, oftentimes people want to just buy all willy-nilly. They want to get in just because they want to get in. Now, if you were to buy or if you were to sell now, you're taking the risk of price continue to go higher to retest this high. So that's why I say it's always best to trade with the trend, and it's just best to wait to see what will happen. Now, again, my long-term bias is long because I understand fundamentals, technical analysis, price action. So what I'm looking for is price to come back down, at least come back and retest this left shoulder here. And that price is around 1954, give or take a couple of dollars, right? If so, I am heavily interested in buying. Now, before I go ahead and buy, if price comes down here, I want to see signs of buyers coming in. I'm not just going to pull the trigger. So I will set an alert here. If you're using TradingView, I like to right click right here where it says add alert, and just say simply here, XAU USD at the right shoulder, and then just tell myself inverted head and shoulders. And that way, when my alert happens, I quickly can understand exactly what's going on, because if I'm trading many things at once, I want to be able to see my alert and see what happens. So if it comes around here, then I will be good to go for a possible buy. And I like to bring my alert up just a bit here because I want to hear that alert before it gets deep into that right shoulder. Now, if it gets to that shoulder, I'm not going to buy. I'm going to wait to see sellers get weak, buyers get strong, and then I would like to buy at least to the top end of the right shoulder, which is around 1993, maybe even to the neckline here around 2009. But I do believe eventually it will break this 2009 area and come back and retest this previous high that we spoke about back in May of 2003. And if you're a swing trader and position trader, you know that you love stuff like this, right? You have to understand technical analysis and price action in order to be confident when you're swing trading this stuff here. And I love to hold it for months, sometimes even weeks, days, months, just depending on what's going on. Now, gold is a bit volatile. It trades a little bit different than other major currency pairs or minor currency pairs. So you want to be careful with your risk management. I risk no more than 2% of my account because I want to be able to get out and I want to be able to live to trade another day. A lot of times I will also break up my lot sizes. So when price gets to my desired area and I pull the trigger to buy, I want to break up my lot sizes so that if price goes against me a bit, then I can add another lot size comfortably. So I like to add on low lot sizes when it gets to my area. If price comes back against me, maybe 20 or 30 pips, then I would enter another low lot size. So when price start going my way and going higher, then I can make up my initial drawdown by having that extra cushion of that trade that I put in. So guys, this is just my analysis here at Gold USD. I didn't even have to go to the lower time frame because no need. If I'm waiting for price to get to this bottom right shoulder right here, there's no need for me to go to a lower time frame. I'm only going to the lower time frame to execute, right? So if price comes down to my right shoulder, now I'm starting to drill down because I'm looking at candle behavior. I'm looking at the anatomy of a candlestick. I want to see sellers start to lose steam. I want to see maybe some consolidation, and then I want to see buyers start to pick up and then go to the commitment of traders. Now, I like to use bar chart. Sometime I will go to the CFTC, which is the government website, but bar chart will kind of show everything that we need. So here's gold right here. I'm looking at the net positions here. That simply means the longs and the buys. So 166,216 net positions. That means that they're in favor of more longs. This confirms my long-term trade bias. The net position here change was 2,791. So they've put in more longs recently as of November 7th, that last week. And then I have 261,000 plus long positions overall. That's the long-term trend that I like to look at. But if I'm trading immediately, I like to look at these changes here. So we see that they've added 600 long positions recently as of the 7th of November, and they exited 2,191 short positions. So that confirms this uptrend that we've had earlier this week. So if I go to the daily time frame, right here is what we are just looking at on the CLT report. This all right here for the last couple of days, we can see that prices started that uptrend. That's the head right here. And now we just need a pullback to make that right shoulder around the price that I told you. So guys, let me know what you think about my analysis. I covered all bases. I covered price action. I covered technical analysis. I've covered fundamentals, looking at the news and the charts and things like that. And that's what it's all about. Guys, remember to subscribe to our stocks if you're interested in diversifying your income, which is very smart. If you're just trading Forex, that's completely fine. But if you're wanting to learn stocks or ETFs or indices or what it is, we've started a new YouTube channel explaining all of that as if you're a beginner. If you've traded Forex, but you have no clue what stocks are, how to calculate your winnings, what is an earnings report, we will break it down, and we're starting from the beginning, and we'll start to escalate into the advanced as we continue to post more videos. So watch our last video. We have another video coming out today, later on, and then another video on top of that this Sunday. I'm excited about this, guys. And so let's go ahead and make this a wonderful day. Don't forget to comment, show me love so that I know you appreciate the content from what we're doing. And we will see you in the next video. God bless.